traders, and welcome to another video analysis. Today is Monday, October 30th, 2023. Let's find out what is going on the Forex economic calendar first, and then we of course will do some kind of a technical analysis of the various Forex pairs. So let's find out what's going on in today's calendar. As you can see, we got some data from the Eurozone today, plenty of the GDP and CPI data. But we will start from the retail sales data from the Australia. They beat the expectations of 0.3% with the actual reading of 0.9%, which is way bigger than the previous reading of 0.3%. GDP in Sweden, 0%. So we are still waiting for the Spanish CPI, Spanish data from the consumer price index, German GP, gross domestic product. This data, this kind of data is scheduled for release at 10 o'clock for the third quarter. The GDP in Germany is expected to decrease from 0%, which is no growth, to minus 0.3%, so no good at all. And if we take all of the measures of the GDP in Germany, the deterioration might be from minus 0.2 to even minus 0.7. German CPI are scheduled for release as well at 2 o'clock, and this is another key event of today. So we got two key events of today. Both are from the Germany. The CPI month to month is 4.5% last time, and it's forecast the forecast is 4%. So we will see what will be the actual reading, and on the general basis, previous reading was 0.3%, and the market expects this consumer price index to decrease to 0.2%. We got some speeches from the ECB officials as well. The Guindos will give a speech at 2 o'clock, and the ECB Arena will give a speech at 7:30. 30 minutes, 1 hour later, we got the Bank of Canada Senior Deputy Governor Rogers to give a speech, and then we got the speech from the Governor Macklem as well. At the end of the day, 15 minutes to 11, we got the data from the New Zealand in form of the building consensus. Last time it was minus 6.7% on the monthly basis. We will see what will be the building consensus on the month of the October. Just a short reminder: German GDP, German CPI, key event of today. So let's take a look at the technical part of the review, and we are going to start with euro dollar. For our chart of the euro dollar is showing us the local high made at the level of 1.0695, decrease below the short-term trend line support, new low, and the intraday technical support is 1.0523, free wave bounce. Let me just reiterate that. There is only a free wave bounce. Where is the Elliott wave? There you go. So from the lows, there you got the first wave, second wave, and the third wave. So free wave bounce towards the intraday technical resistance at 1.0598, and then we got the bearish engulfing pattern below the 50 and 100 periods moving average on a 4-hour chart. Right now we're testing the trend line again, and it looks like we want to go lower. The weak and negative RSI or the weak and negative momentum supports the short-term bearish outlook for the euro dollar, especially with even lower than expected numbers from the German GDP or CPI. That would mean the extension lower will happen very, very soon. After the breakout below 1.0523, next technical support is located at 1.0496, 1.0483, and the key technical support is still seen at 1.0449. So please be focused today during this data release. Remember, German GDP, German CPI, different hours, different economic data are scheduled for release. Both of them might have a big impact on the today's market. Let's switch to the British pound. Let's see what's going on in the UK. So the cable made first movement to the downside, right towards the 1.2089. Then we have a very nice pullback towards 1.2287, and very quickly we went lower, made a new local low. So this is low, this high is lower than the swing high. This low is lower than the previous lows. Now we retrace in 3 waves towards the level of 1.2161. This is intraday technical resistance, and just recently we broke below this technical support, intraday technical support at 1.2123. Current low was made at 1.2091, and we are heading towards the 1.2068. So everything here on the cable revolves around the level of 1.20, and the next technical support is located at 1.2036, only 36 pips away from the round level of 1.20. The weak and negative momentum supports the short-term bearish outlook for the British pound, and it looks like sooner or later we will test this technical support levels. Moreover, we are still trading below the short-term trendline resistance, below 50 and 100 periods moving average, so the outlook for the British pound remains bearish. Let me just take a look at the US dollar index, because we want to see whether the movement to the downside on euro dollar and movement to the downside on the cable is caused by the strength of the US dollar index. So what do we have here? We got very nice bounce from the level of 105.33 towards 106.86. So let me just reiterate this these levels here. So that will be of course the intraday technical resistance, and that would be the technical support. The intraday technical support is 106.29. So where we are heading right now, it looks kind of a bullish for me. 107.32 was the last very important swing high, am I right? Yes, this is the swing high. The last low was made in the July 2023. So it looks like we got a 3-wave downside movement. So we have the correction, flat correction on the market. Yes, so we got like wave A, let's say wave B, and wave C to the downside or something like this. We might still evolve into more complex and time-consuming correction here on the US dollar index. However, that movement to the upside looks pretty impulsive. To me, momentum bounced from the level of 50, now is moving higher, and it's still positive. It's still quite strong, 58.5 point. So it looks like at the beginning of the new week and the end basically of the month of the October, the bulls want to resume the up move and head above the 106.85 and even towards the 107.32. So that situation would likely result in a very nice weekly candle, green candle, and very nice monthly candle, big up candle on the US dollar index. So the US dollar index on the intraday basis is getting stronger across the board. How does it affect Bitcoin? Well, for our chart of the Bitcoin, it's showing us the breakout below the short-term trend line support. So we trade below right now below 50 and even 100 periods moving average on the 4-hour chart. The intraday technical resistance is 34,414. So this level here must be violated in order the Bitcoin to test the recent highs, roughly around $45,000. Now we broke below the intraday technical support, 34,205. The local low was made at 34,120, and we are heading lower. The next target is 33,943, and even the level of 33,394 might be tested soon. The momentum is weak. It's negative. We've just made a local low on the, no, we're just testing the last momentum low made during this movement to the downside. There is still a room here for the momentum to hit the level of 30, which is the level designating the extremely oversold conditions. There is still a room to the downside on the chart. So it looks like the Bitcoin might be correcting way lower than we want. please notice the fact that still this situation here is quite clear. We have a spike to the upside towards $35,000. And since then, the spike was made on the October 24th. So actually 1 week ago, for the whole week, the Bitcoin has been consolidating here in this zone between the support and the resistance, horizontal support and resistance. So even spike lower doesn't mean that we are in a full reversal mode. It still looks like the bulls are getting ready for another spike to the upside that could be made very, very soon. Only a sustained breakout below 33,244 established this level here, 35,227 as the swing high, and a deeper correction can be done towards the levels of the 30,000 and even below. For now, we're just correcting the intraday movement, so it's not that bad at all. We can still move back to the upside. Apparently, the momentum is still negative, so maybe some kind of a hesitation to the downside is now being made on the Bitcoin, but sooner or later this up move should be resumed as long as 34,000 level is not clearly violated. So that's everything from me for today on the beginning of the new trading week. Please remember, tomorrow is the last day of the month of October. Of course, there might be some increased volatility across the market, but we will talk about it tomorrow. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.